So, Oliver, RBS up strongly today. What's the news?
Well, shares are up 12%. They've pre-released a big chunk of their first half results. The results weren't due until next Friday, but they're much better than expected now that they've come out. The bank simply couldn't hold on to the good news and felt they had to tell everyone as soon as possible. So they've come out, they've been forecast by a long way, and the shares are up 12%. They've dragged a few of the other banks up with them as well. Barclays and Lloyds both up by 1 or 2% as well.
So they thought they didn't want to surprise everybody later, they just surprised everybody earlier. So what was the improvement all about?
Well, the improvement was mostly in the area of impairments. This is the charges that banks take to cover bad loans and souring loans. And there's a much smaller charge than expected. RBS took an enormous impairment charge at the end of the fourth quarter of last year. This is when they had the results and they announced earlier this year. So they've already taken a lot of impairment charges, but now that's come right down to more or less zero. So people were very surprised by that. RBS says this is because the underlying situation is much healthier. What they've been able to do is sell their non-core assets for much more than they thought they'd be able to sell them to. They say people are looking for yield and the economy is looking good and low interest rates help, so they've managed to realise much better prices for some of these assets than they expected. Hence the impairment charge is very low and profits are better than expected.
Sounds like a little bit of a sort of right back though, sounds not really so fundamental. So what should we expect for the rest of the business looking forward? Is it a one-off or is it actually something that's underlying strength in the business, underlying strength in the economy?
Well, I wouldn't extrapolate too much out of this because impairment charges can be volatile, as RBS is demonstrating. And underlying that, the overall size of the loan book is still flat to shrinking slightly as they sell off these non-core assets. RBS say there's some good trends in new lending, particularly small businesses, but it's still not growing. Costs are coming down, which is good, and there's a lot further to go on that. But still, RBS has got an awful lot of work to do before it's in a sort of normalised state. Lloyds, its great UK rival, is much further along the road in that sort of process.
So we shouldn't be banking on decent continuation of this trend. Thank you very much, Oliver.